As we can see from Elon Musk's own comments, he is open to the possibility of keeping prices low. He even included interest rates in his remarks. Rather than that being a factor specific to China, I believe it's more a function of just how competitive, crowded, and strong the Chinese manufacturers have proven to be in that market. I believe that Biden in particular is really driving up a tremendous amount of volume and putting a lot of pressure on Tesla to respond appropriately. When investing in Tesla stock, Tom Nash, a Tesla investor, has recently discovered what investors should be looking out for. Since Tesla stock is currently selling at a relatively low price, Nash also mentioned that when choosing a company to invest in, investors should actually look out for companies with good businesses. This is because most investors tend to move with the flow. When the price of Tesla stock is high, they buy shares and become more bullish on the company. When the price falls, they start selling their shares and lose faith in Tesla's potential. Nevertheless, Tom Nash believes that this is not the best way to invest. Instead, investors should consider a company's fundamentals. This way, no matter how much the stock sells for, you can be guaranteed to make money in the end. We may have seen more price cuts from Tesla in China, as you mentioned, and we even had an odd announcement of a truce among manufacturers, which lasted for only a few days. However, what we really learned in the weeks that followed was that Elon Musk himself discussed the possibility of further price cuts, saying that he would not rule out continuing to bring down prices. He specifically mentioned interest rates. I think rather than that being a factor in China, it's more a factor of just the amount of competition in that market, how competitive it is, how crowded it is, and how much that the Chinese manufacturers in particular have really proven strong. I think BID in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer right. It's really interesting to look at the way that the competitive pressure is the same and also different in different geographies. So why is there so much pricing pressure from this competitive environment that in China I think we're seeing in a pattern of as costs come down, as input costs come down, we saw the last couple of years, not only of the semiconductor crisis putting some pressure on companies, but also raw materials for batteries of lithium and nickel prices in particular really being a difficult challenge for these companies to work through. Those prices have come back down. We've seen, with China having this huge lead in terms of getting a battery supply chain up and running, we tend to see, as prices come down, China, price up is able to come down first. And so perhaps we see that spread to other markets. As previously revealed by Tom Nash, the value of Tesla shares may potentially reach over $1,420.11 over the next 5 years. The basis for his most current valuation is Tesla's revenue, which has clearly been rising dramatically. His prediction was also influenced by remarks made by a prominent Tesla analyst, Gary Black, who projected that Tesla would reach a price target of $370 over the course of 6 to 12 months. According to the Tesla Bull, there are a number of factors, including potential catalysts, that need to come into play for Tesla to reach this price within the given time frame. These are the crucial fundamentals that Tesla investors should be thinking about rather than concentrating on the current volatility in the stock market. Hey everyone, welcome back to Tesla Hype. In a previous letter or Shelled, Tesla explained its pricing strategy, stating that given the potential lifetime value of Tesla vehicles through autonomy, supercharging, connectivity, and service, its near-term pricing strategy considers a long-term view on per-vehicle profitability. The automaker expected that it would continue to produce products, with pricing for them evolving upward or downward depending on a number of factors. During a conference call to discuss its quarterly results, Tesla stated that overall revenue in the first 3 months of the year grew to $23.3 billion, up $24 over the same period last year due to an increase in car sales. Musk stated that he believed Tesla made the right decision in pursuing higher sales at lower profits. Musk informed investors that Tesla is the most profitable electric vehicle manufacturer and that long-term profits would continue to be high. While investors continue to worry about margins, Elon Musk also mentioned that Tesla's bottom line could benefit after cars are sold using recurring subscription payments for supercharging, self-driving, and other features. But what other factors should investors be thinking about exactly? Let's find out, but first, if you enjoy this kind of stuff, please click the like button, subscribe to our channel, and enable notifications to receive updates on everything Tesla has going on. The best way to predict a company's value, according to David Traynor, founder and CEO of investment research firm New Constructs, is to use the most realistic projections, such as those for sales and earnings. This is certainly true for Tesla, whose margins have demonstrated that it is not just an automaker, but also a tech company that will lead the way in the development of self-driving cars and produce the next generation batteries that its competitors will rely on. However, keep in mind that despite the barrage of new, mostly low-cost models released by every major competitor, this will not significantly lower Tesla's profitability going forward. In terms of profit, Tesla is still laying the groundwork and accept the firm's profits should remain strong among the highest in the industry. Elon Musk even believes it is preferable for Tesla to ship with 4 factories worldwide and a proven significant electric vehicle production footprint. Tesla already has several advantages over rivals, while many others are still expanding their capacity. According to Tesla, their vehicles are also performing incredibly well in their home regions. In the first quarter of the year, the Model Y was the best-selling passenger car worldwide. With Tesla's production and sales predicted to increase throughout the year, the Model Y was the best-selling non-pickup truck in the USA, the best-selling SUV in China, and the best-selling vehicle of any sort in Europe during the first quarter. Any other automaker will have a difficult time competing with the Tesla Model series. According to a recent report by Worm Capital researcher Cameron Tierney and partner Eric Markowitz, the Model Y has consistently been at the top of sales and the 3 largest automobile markets in the world. This has caused the Model Y to climb 3 spots to go number 1 globally, with more than 263,000 sales to open the year. By 2030, Tesla is probably going to rule the SP 500. According to this analysis, Tesla's competitive advantage stemming from AI advancements positions the company as a strong player in the market. It also draws from a multi-year study on Tesla's various business sectors, all of which have expanded due to the company's constant growth. The study concluded that Tesla is working to control and reinvent its own factories, tools, and components to meet its needs. We anticipate that Tesla's growth will enable it to reach a compound annual growth rate of 50 by 2030, with growth in net income and free cash flow expected to accelerate in the upcoming years and expand the company's margin profile. Beyond Tom Nash, several analysts predict that Tesla shares will rise significantly from their current levels, particularly given the massive shift to electric vehicles and the fact that the company is the first billionaire investor in Tesla. Tesla has several advantages over other automakers, such as Rivian, Lucid, and NIO, which will require years of consistently high revenue features to enjoy. The car company has the infrastructure needed to succeed in the EV industry. It also has the best supercharging network globally. A $1 trillion company by 2030, according to predictions made by Ron Barron, who previously stated that he expects Tesla to continue skyrocketing for the next 10 years, and that not even all of his investors will make up to 5 times their investment in the company in the near future. In a similar vein, CEO of ARK Invest Cathie Wood views Tesla as a very profitable investment opportunity, particularly when it comes to the topic of disruptive innovation. What fundamentals of the Tesla stock do you believe investors should be paying attention to right now? Please share your thoughts in the comments section, and don't forget to share your valuation of Tesla. If you'd like to learn more about what Tesla has been up to lately, click the next video on your screen. We'll see you there.